Good morning. It's Jeffrey Cohen, Chicago Quantum, U.S. Advanced Computing Infrastructures Incorporated. Here to talk today about the stock market, and our video is called "Forge Your Edge." And the picture is of a forge and a hammer, something you'd use to make a very, very sharp blade, a sharp knife. And the reason we say that is because the edge that we're finding in our model, which looks for risk-adjusted expected return portfolios, is quite small. And so we ran it, and I'm going to pull it up for you. And it's a real struggle to invest based on the model right now. I say that because you just really struggle with the level of edge. And so let's open it up. Jeffrey, show me your edge. I don't mind at all. Here we go. This was run last night, and we actually reran some of the solvers first thing this morning on the data that we stored last night in order to see how we do, if we could do better. Your expected market return net of risk. So this is the incremental market return to risk is now under 4%. It's 3.87%. Risk-free return is 4.7%. There's still lots of companies, that are international, that don't have market cap. Do you know there's a lot of little banks that don't have to file 10Ks and 10Qs? It's interesting, or 10Qs at least. So 1,654 stocks passed data validation, and those are stocks with $2 billion or more with market cap. So the second thing we did, you've seen the expected return being very low. We're also limiting ourselves to stocks that are worth $2 billion or more. So they're not being memed, they're not being manipulated, not nearly to the extent that a $20 million or $100 million stock can be played on a regular basis. Your stock variance is 2.9 times 10 to the negative 4 for this set of stocks. The only stock that scored better, we talked about it yesterday, was P&M Resources, which is P&M is the regulated electric utility out of New Mexico. If you would have bought it in 2008, 2009 at the bottom of the market, you'd have made 6 times your money since then, and it pays about a 3% dividend. But in the last 3 years, it hasn't really moved. Not at all. And so it's not a bad stock if you think it's going to go up another 600% over the next 10 years, 15 years. But whatever, it's not a bad return. You could live on that. So the best portfolio we found was 41 stocks. Macy's, McDonald's, Lockheed Martin, the CME, EA, Electronic Arts, ATVI, I guess it likes the gaming stocks, AB. There's P&M, there's TXN, there's Yum Brands. Zim is a shipping company out of Israel. J&J, IEP, Carl Icahn's company. HRL, Hormel, Google. So this is not a set of value stocks, Dryden. It's just a set of stocks that work well together, Microsoft. And so this is not, you got to form your own edge. So then the question becomes, maybe you want to invest in positive skew or negative skew stocks. Maybe you want to invest in leptokurtic stocks that have low variance, right? So you can really take advantage of that leptokurtic nature. The safety. General Foods, Hormel, chili, Hershey's chocolate, Kellogg's cereal with Tony the Tiger, Smuckers, and a CBPB, I think, is Campbell Campbell Soup, Campbell Products, brands. So, yeah, lots of food companies, not really going to surprise you. That's good, though. Maybe you got a widows and orphans fund and you don't want to lose a lot of money. There you go. Now you look at the stocks that are platykurtic with a low variance. Platykurtic means flat tails. It means your returns are going to be more centered around 2 standard deviations. And these stocks, it's not the same. So you got Yum Brands, EQC, you got Berkshire Hathaway B. But these are not necessarily your household names. I don't know a lot of these companies. And so, all right, it's interesting. You might say, Jeffrey, I want to go big or I want to go home. Let's see if I can find you some negative beta stocks. Now you know Chicago Quantum is home to the negative beta stock list. I don't know if you know that. It's an exciting place to be if you're looking for low beta stocks and high beta stocks. MicroStrategy, MSTR, has the highest beta against the S&P 500, 3.1 times. Wayfair, Coinbase, Unity, Farfetch, Asana Block, Pacific Biosciences of California, Cloudflare, Confluent, GitLab, HashiCorp, TG Therapeutics, and Shopify all have betas over 250%. These are the systematically riskiest stocks in the market. Bar none, by far. You want to ride the crazy train, you buy high beta stocks and you trade them. Low beta. These are either low risk or at the very extreme they run independent of the S&P 500, providing you that little bit of safety that you might be looking for. You might not have it in your relationships, but you can have it in your stocks. General Digital, P&M Resources, Fortune Brands, Kellogg, Campbell Soup, Cal-Maine Foods, General Mills, J.M. Schmucker, Hormel Foods. Oh, and then there's your drug companies, Bristol Myers Squibb, Merck. Go back to Kraft Heinz, Carl Icahn, Icahn Enterprises, Activision Blizzard, Lockheed Martin, Equity Commonwealth, Johnson & Johnson. So Northrop Grumman, Hershey's, AbbVie, Altria, cigarette company. So let's stay focused here. There's 3 or 4 industry groups that have a low beta right now, and this is what you would expect. So Jeffrey, you haven't told me yet about today's stocks. What about today's markets? No, I haven't. I'm telling you about a deep analysis we did last night, and I'm sharing with you some of the key learnings, right? Food companies, drug companies, and defense companies are systematically lower risk in this market. You can sleep easy at night knowing that people are going to buy guns and they're going to buy butter. Guns and butter. Although, that's the name of a book, actually. And the truth is, it's not really butter. These are general foods. So, you're going to buy guns and cereal. And canned foods. Processed foods. Nasty processed foods. So, where's my negative beta? Come on, Jeffrey. Here it is. So, Affirm Holdings, AFRM, doesn't make our list because the beta is too high. AFRM. Jeffrey, what's a stock with such a high systematic risk that you won't even have it in the model? Affirm Holdings. So now we look at negative beta, U-Haul, Cytokinetics, and Chesapeake Utilities Corp. So again, you're looking for some excitement. Here you go. U-Haul, Cytokinetics, Chesapeake Energies, and Affirm Holdings. So what happened, Jeff? So you ran the model like 6 more times. You ran different solvers, and he came up with the same 41 stocks. This portfolio is about the best you're going to do. So let's take a look at the market. By the way, we are technical consultants and registered investment advisors. We're located in Highland Park, Illinois. If you're looking to talk stocks, if you're looking to build an investment portfolio, a financial plan, if you're looking for IT consulting services or programming support for quantitative models or just general management consulting, you give us a call. U.S. Advanced Computing. So where are we with the market? We're going to go to FinViz. And you can see yesterday the market looked like it was trying to recover, and then it dropped back down. But you're still at almost 4,100 for the S&P 500. Our top of the market at the very, very peak was 4,432. Now, it went to 4,800. So we're down about 20% from the top. But we're only down about 7 or 8% from where a lot of smart people thought it was the top. You're not that far down on the market. You look at the futures, crude oil is down to 76. That's interesting because I heard that there was a build in crude oil stocks. Yeah, that's what happens when people start acting like there's a recession, even if the economic data doesn't suggest a recession. They stay home. They cut their own hair. They drink their own coffee at home. They eat their own food at home, right? Maybe they're focused on family first. The same fungus fly from the plant is still here. Silver at 21.32. Copper's still over $4 though. I would not call this a recession. This is just an oil issue. It's interesting because the VIX is up a little. Stocks are down. I can't wait to call a free fall Friday, but that's not today. Today's just a crappy Friday. It's a little red, not by much. Dollar's strong because people are expecting interest rates to go up. I don't want to repeat myself, but yesterday I talked a little bit about the producer price index and the way it changed. And goods went up over 1%. Services went up about 0.5%. You combine all that up, it was 0.7. The producer price index is up 6% for the year, non-seasonably adjusted, and it's up 0.7 seasonably adjusted in January. So January prices, costs of the goods and services that you buy if you're an American citizen that lives not on a farm but in an urban area. 0.7 in a month is 0.84 in a year. And if it compounds, you're at like 9% inflation. 8.4, that's high inflation, right? And so they're going to raise interest rates. Everyone knows that. There's no mystery here. Oh, Jeff, I'm so surprised. They're going to raise interest rates. No, you're not surprised. Do you know why? I'm going to leave the stock picks up here. This is the best that our bespoke reverse simulated annealer did in 95 seconds. I'm not surprised. Interest rates are going up. Policy rates, short-term rates, there's a difference. Long-term rates, 30-year, 10-year, these are set by Mr. and Mrs. Market. And you can see how this bond fell. The 10-year note is down. It's still in a trading range, but it's down. The 30-year bond, still heavily in a trading range, but it's down. It's hitting support levels. That's the market talking. Now, if you want to see what the government controls, then we look at the 1 month treasury. You're at 4.59. You're really not moving. They're really keeping those rates flat. I think the Federal Reserve Bank in New York is doing a great job keeping us between 4.5 and 4.75. Good job, guys. Really terrific. Unfortunately, by not letting some of the steam out, you're actually causing a bit of a problem here. Because you want to let the steam out. If the rates want to go up, you got to let them up, right? Now, this is the 13-week. The 13-week is at 4.68, almost 4.7. Our risk-free rate is 4.7 because I figure you can buy 13-week, 2 to 3 month Treasury bills right now on treasurydirect.gov. You type treasurydirect.gov. You open up an account. I just did this with my wife this past week. Oh, I love it. You can get 7% on a savings bond. Done. Done and more done. Do it. 7%, people. Now, let's see the auction results. For you and me, you don't have to be rich. You really don't. You could just look at, holy crap, they're doing a lot of stuff here. So let's look at a 13-week. So yesterday. You could have bought this yesterday. Yeah. No, this is the, it was a lot of money. They were issuing $60 billion of bonds. What are you guys doing? Go back a week ago. 60 billion again. Oh, where's the interest rates? What did people get? That's the question. We're going to party like it's your birthday. Okay. Anyone who bid more than 4.68% got accepted. So, and I believe non-competitive. So anything less than 4.68 was accepted in full. This is competitive. I don't know what they're giving you if it's not competitive, but 4.68. The investment rate 4.80. That's nice. That's an equivalent coupon issue yield is 4.8%. That's a big deal. You can earn 4.8% on a 13-week treasury a week ago. Let's say you want to go 4-week. Let's say you're nervous, right? Jeffrey, I'm nervous. I want a 4-week. Okay? 4.5%. Your investment rate or a coupon yield equivalent is almost 4.6. All right, fine. I'll give the government my money for longer. 52 weeks. I'll do a 1 year. This is a long time ago. We're not doing that one. That's like a month ago. Here we go. On the 9th. Half a year. It's not bad. People, 5% on your money for 6 months from the federal treasury with no interest rate risk, no default risk, nothing. And in fact, SOMA, open market transactions, do you know the Fed bought $6 billion of it? So it was $122 billion was bought by said it wrong. $48 billion was bought by people like you and me. And a couple of dealers. Credit Suisse probably bought some. Citibank. And you and me. Bob. SOMA, the Fed, bought $6 billion. Now, the problem is that the Fed has all these bonds that mature. And they had $6 billion sitting there. So they rolled over their 6 month to 6 month. So 54 billion were actually sold. Now the interesting part is tendered 128 billion, 54 got purchased. Or here 122 billion were tendered, 48 were purchased. So there were people saying to the federal government, you got to give me more than 4.8. You got to give me 5, 5.5, 6. So every day there's a treasury auction where these interest rates are being set. It's very important because it's not like some central banker is sitting around, let me put my central banker hat on. I think 26 week should be 5%. No. $122 billion spoke and said, I'll take your bonds, your bills, 182-day bills, but I want 5%. And a lot more said, I want more than 5%. And so that's where we're at. Interest rates are going up. The future looks bright. I got a green sweatshirt on because I'm expecting, it's going to be great. But the only thing really looking up in the stock market is the VIX, which is the cost of insurance, the volatility, the implied volatility of protections, right? So now let's take a look. I like Yahoo Finance. We're going to go look at some of the portfolios that I have set aside. Market opens in 2 minutes. So maybe I'm just going to take a moment. Let's go to NASDAQ Book Viewer. Please don't steal my password. It's your birthday. We're going to party like it's your birthday. By the way, that's 50 Cent in the club. We were listening to it this morning while I was making lunches. So there's Corbus. $3.20 pre-market action. You see the bids start to load. Let's look at the SPDR, SPY, which is the S&P 500 index ETF. This is what we use in our model. As a proxy for the S&P 500, we use this particular ETF. We like it. It works for us. We're also going to take a look at QQQ, which is a NASDAQ 100 index ETF. It's also a good ETF. Let me move that to the side. I'll figure out if there's something else we want to look at here. And I'm going to explain how to use these, because I find this always very fascinating. So the way you look at it for Corbus is there's really no bids. All the bids are 100 shares. And there's really no sells or asks. They're all 100 shares. So Corbus hasn't really loaded yet. Nobody really wants to buy or sell the stock. Now we look at the S&P 500, the SPDR. 76,000 shares bid, 77,000 shares, 78 ask. It's even mix. It's at 406.26, 406.22. If you look at this number, you can see what the last trade was. And here on the NASDAQ, you can see that the buys slightly outweigh the sells. And it's actually a pretty good top of the book. These are some pretty big bids and asks on both the SPDR and the QQQ. So 405, this thing was like 410, 415 not long ago. QQQ looks like it wants to break through 300. The SPDR's breaking through 400. And Corbus is going to break through $3 is what it looks like. Because now you look at your sell orders and there's 46,000 sell orders, 8,000 buy orders. Now I'm going to teach you something. So we're going to look at Corbus and we're going to see, is there something else about Corbus that we could learn? So I'm going to move this. I'm going to move QQQ over. The spider over, and we're going to take a better look at Corbus. And then there's a couple other ways you can look at it as well. But column selections, I want to see the time and the MPID. The MPID is the identification number of the market participant. Market participant ID. So you see FLTG, that is a business, a company. FLTG. They only have to do 100 shares. And they are a supplemental liquidity provider, or they're a market maker. And you look and you see 5 shares bid, 1 share ask. That's so stupid. 1,292 to 96 shares traded so far. So you look at this and you think, okay, where's my volume? So my volume is at 900 shares at 310 and 327, 3,873 shares. So the bid ask is really 310 to 327. Okay. So Corbus right in the middle of that, 318. You look at the spider, up, back over 406, the QQQ is remaining over 300, 301.32. Hard to know what we're going to see. So let's take a look at something else if you want to follow a stock. We're going to go to the Chicago Board of Options Exchange book. And they have their own book for NASDAQ exchanges. And we're looking at Corbus, BZX equities, no shares have traded. But the 100 shares, 307, 327. On the BYX, 305, 328. So the BZX is actually a better book. Edge A, 305, 328 versus 307, 327. BZX is better than Edge A. Although Edge A does a lot of volume. Edge X, you see some trades. 305 to 328. 307 to 328. Still your best book is BZX, but Edge X has some volume. 26 shares. I'll give you $100. Take all their shares. So stupid. You can see the bids are small. So I don't understand why this would even be. I mean, this is a game, right? Like you look at this book and you think someone's being a silly no-good-nick here. 305 to 326, 307 to 328, 305 to 331. Now we're at 305 to 330. So it looks like the ask has gone up. It's 327 to 330, 330, 328. So it's a very soft book. Not much happening. You can see 327 as you'd expect, and then 330. Here it's 310, 306, 305. So what's interesting is NASDAQ has an order on its books for 310 that just goes right to the NASDAQ exchange. You could think of it as a direct exchange or a dark pool even. Although 3,000 shares at $3 probably isn't enough for a dark pool. But it's not on one of these 4 exchanges. It's on the straight NASDAQ exchange. And so, you know, you have to look at all these different books in order to figure out where are we? Where are we with this market, Jeff? How's Corbus doing? Do I buy? Do I sell? Now, we sold some Corbus not long ago. And we're in what's called a wash holding period. Because we sold, if we buy, we might undo the tax loss that we gained. So we bought, we felt good about the buy. We got a tax loss. I don't want to lose that tax loss. I'm not planning on losing the tax loss, so I'm waiting. I'm waiting. I might wait all day, right? I might have to wait 31 days to trade Corbus. And I'm willing to wait. I'll be honest with you, I'm in no hurry. Because Corbus could actually fall all the way to $0. Or to $1. Or to a nickel, right? And if it falls to a nickel, I'm buying the whole company. I swear to God, as God is my witness, crossing my heart, my hat over my heart, if Corbus goes down to 5 cents, I'm buying the whole company because I love what they do. Putting my hat on now. So, fall Corbus. Fall to a nickel. Give me the chance to buy the entire company. Do it. It's probably not going to do it though, right? So why is Corbus falling? Jeffrey, what happened? Those sons of bitches, right? They don't know how to make money? No, they don't know how to make money. SEC, Edgar, search. Company filings. CRBP. Let's go to the videotape, Jeffrey. What happened? Talk to me. What's happening with Corbus? So I'll tell you what happened. Is on January 6th, just to summarize for you. On January 6th, the company said, oh, we're trading under $1, but we're treading water with the NASDAQ. We asked for a meeting, but we didn't schedule the meeting. We might get a meeting. We're not sure about the meeting. We'd like a meeting. We asked for a meeting, but there's no meeting. But maybe we'll get a meeting. And so what happens is they stalled for time. We already voted. I already voted for a reverse split. They could have gone anything from 1 to 4 to 1 to 40. But the fact that there was no reverse split made me feel like maybe the stock was going to go to $1 on its own. Maybe they didn't need it. Maybe they had something up their sleeve. I was right. They did have something up their sleeve. I didn't know what it was. They're very good about keeping a secret. I get it. Not violating fair disclosure laws. I appreciate it, right? Now, February 13, Corbus, what did you do? What did you do? What are you people thinking? So they entered into an exclusive license agreement with CSPC Megalith Biopharmaceutical Company Limited, which abbreviates to CSPC. It's a Chinese pharmaceutical company. We looked at the website. They got like 3 drugs for sale in the U.S. It's pretty cool. And they do different dosages, and they talk about what the pill looks like. Got it. But what's funny is that Corbus is paying CSPC $7.5 million. And they're going to pay him royalties and up to $800 million. $700 million. $700 million! Corbus doesn't have $700 million if the drug's a big success. Solid cancer tumors that show Nectin-4. Nectin-4 displaying solid tumors. Now, what's nice, let me be real now, okay? Oh, what's not nice? They did a 1 to 30 reverse split at the same time. So here's the thing. They spent $7.5 million of their hard-earned dollars, and they reverse split 30 to 1. No one knows what the hell Nectin-4 displaying solid tumors are for cancer. No one knows any of this. They just know it's a high, it's a high flyer. It's up, it's down. I'm going to make money. I'm going to sell. I'm going to buy. I'm going to blah, 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 ding, bada boom, bada whatever. And they're not going to do the homework, right? Megalith. I'm thinking Megamind. Am I? What's Megamind? The button of doom. Here he is. When I think of megalith,
The entire facility is running at full capacity.
I think of Megamind.
How are we going to protect Metro City?
Minion, find the remote.
There it is.
Remember what it looked like?
No, I don't remember what it looked like. Private!
Well, it's not that one.
CSPC, megalith, biopharmaceutical, nectin for solid cancer tumors.
We got binder bubbles, kaleidoscope, hypno stars, flamethrower, torpedo. We got the multi-pin. We haven't even tried the multi-pin in the...
Bravo?
There it is. Corbus working with the Chinese. Love it. So, no one really knows what's going on. It's very confusing. And then they did an 8K revision that just says, oh, we missed like a comma or something, right? Nothing happened. We don't know whether it's doomed.
Sound bugs are chewing their feet faster than
This is what it feels like. Megalith. I gotta tell you, that's how I'm feeling with Corbus. And they're not giving me anything, any ammunition, anything to work with. So, the stock has fallen. And now you go to Twitter. It's interesting. I'm going to pull Twitter up. You know, we still haven't looked at the stock market yet. Is there anything going on with the stock market today, Jeffrey? Anything? Anything? Yep, QQQ is right where it was. The spider is right where it was. And Corbus. Let's see. Give me something good here. Tell me something I don't know. Corbus Inc.'s licensing deal with CSPC Megalith. You don't need to see the picture again, do you? Megalith. Megalith. CSPC Megalith. For an anti-Nectin 4 ADC. The good news is they're both going to co-develop it. Maybe CSPC is going to spend some money. And there's a couple things that are important. Now, I already downloaded the file. I could just pull it off my hard drive, but we're going to do it the hard way. Corbus Pharmaceuticals Investor Relations. Presentation. Oh, it was updated February 13. Okay. Precision Oncology. See how they're actually focusing their message a little better now. A little better, which I appreciate because established targets enhance probability of success. So now they only have 2 drugs in their pipeline. They got rid of obesity and they got rid of linabisum. Bye, linabisum. Bye-bye. You suck. You're not effective. You didn't help people. And I guess fat people are just going to have to stay fat for another, until they get money. It's too bad. Because, to be honest with you, I'd love the idea of popping a pill. Next thing you know, like I've lost 5 pounds of fat. That'd be great. I'm going to go get a box of cookies. I'm going to eat the cookies and then take a pill. No, not important. What's important is solid tumor cancer. That's something I pay for. That's something if I have God help me, right? If I have a solid cancer tumor, I need it. I need it. And the good news is Pfizer is coming first to market. These guys want to be best to market. So they're targeting the TGF-beta, with their alpha V beta 8 enriched solid tumors, and now they're going after Nectin-4 enriched solid tumors and I don't even know how to pronounce that, urothelial cancer. Okay, has an IND for the FDA. This one they're going to try to do an IND Q3 now of 2023. First patient Q4. So 2 drugs, focus your resources, solid tumors. Get rid of all the distractions, reduce your spend run rate, focus. Love that story. No one talked about that story except for Rachel Blake mentioned it. Rachel Blake is the chief scientific officer of Corbus. She was hired from, was it AstraZeneca? She was an oncology leader, an executive at one of the big firms. And I got to tell you, it's a good hire. Nectin-4 is clinically validated target with an untapped potential. Okay. She was from Astellas. Come on now. Is it true? Is she from Astellas? Takeda. That's where she worked. Takeda. Takeda Pharmaceuticals. She was head of U.S. Medical Affairs in the Oncology Cancer Unit. Okay, so she's ex-Takeda. Where are we? Here we go. So fine. You got something with these guys, right? CSPC. Market cap, $15.7 billion. They got drug licenses. They got U.S. deals. We saw it. They got revenue of $4 billion. All right, so they're partnering with a big Chinese company, which is helpful. Maybe the Chinese people will buy some of the stock. Oh, it's $3.21. Maybe they're not buying the stock. Okay, CRB 601 is Corbus's own precision targeted approach. Large opportunity potential if the proof of concept is validated. So it's not even, it's early stage. It's early. I just don't know. Is this even going to work? You got the inflammatories. I don't know if it's going to work. Targeting the integrin alpha V beta 8. Novel approach in regulating the TGF-beta growth hormone. See, if you regulate TGF-beta growth hormone, it makes the cancer stop growing. And it's especially helpful in immunosuppressed, or what's the right word? If they're non-responsive to the traditional medicines. So Pfizer is already going for it. Pliant, Morphic. They're in phase 1. They're in indicative, preclinical. They're going for H2. Solid tumors, monoclonal antibody. I get it. You're in a crowded field, Corbus. You're in a crowded field. That's good because maybe your drug will work a little better. It's a little different. And there was some good early non-clinical data, right, that looked good. So next step, they're going to go for the IND filing for a new drug discovery. First patient treated, non-clinical validation for the biomarker, and then dose. You got to figure out the dosage. 2024. What are the catalysts? 2023 for their own drug. So basically, you got to wait a long time. You got to put your money in, and you got to sit quietly. This is rough. I don't know that I can handle that. It's not a bad leadership team. It's a tough situation there. So, I don't know. I don't know that I'm feeling good about this, right? It's a tough business. But they've done some good work, right? They focused on just 2 drugs, solid cancer tumors, quit with the cannabis, quit with the obesity. I get it. I love an obesity drug. I think that'd be terrific. But not when you have limited resources. And so, good luck, Corbus. Good luck. I'm still holding. I'm waiting. Waiting on a friend here. I did sell 25% of my position recently, but I'll probably buy it back for 50% less, and I'll feel good about it. All right. So where are we at with the overall market? By the way, I want to thank all my viewers that are out there. I appreciate it. I think this is great. Thank you. Maybe I'm being a little sarcastic. There's nobody watching. I'm doing a live stream and it's just me. It's just me out here. I got all this data, but because I think the market is risk off, I don't want to make a lot of risky bets right now. I really don't. So this is what we call the holdings. Oh, we're up 35 cents. Thanks. Thanks, market. I appreciate it. At least I didn't lose money. So Zim is up. Zim was our close call. SMLP on the rise. Love it. Love it. D-Wave is in the toilet. What happened to D-Wave and Corbus? Baxter's down a little. Not much moving. Not much good. It's helpful. SIVB is the bank for private equity. Blend Labs, Hydrofarm, Upstart. Not much moving here. Now yellow we like. Credit Suisse we like. There's a lot of stuff we like out there. It's just hard to know. D-Wave, I like the technology. I got to figure out, what's going on. Maybe we'll run our job on it again. I haven't run on quantum in a while now. Just because I didn't feel like it. You know what? It's like, do you want to do it, or it's fine the other way? Maybe I'll find a better answer. Maybe this is the answer right now. So, Credit Suisse is down under $3. Tough business. Yellow around 277.50. They owe like so much money though, so it's crazy. Summit, SMLP, 173 million. All right, so negative beta stocks. Now, what's interesting is, I don't know if you noticed, there were only 3 negative beta stocks left. This is as of last night. Now, this doesn't take into account the small caps, so some of these are pretty small. But you can see the negative betas are down. With the exception of Chesapeake. Chesapeake's up. How about high beta? High beta is down. So it's interesting. So Friday, it looks like people are really trying to aggressively sell off. But the indices themselves aren't doing that badly. And what that tells me is, so How do I describe it? People are selling off high beta stocks, risky stocks. Let's look and see if chips and semiconductors. That's something people understand. So they're selling off the risky businesses, right? Market's down 1%. The market's still over 4,000. It's not going anywhere. It's fine. And they're dumping the high beta. And you know they've got this list. They don't rely on U.S. advanced computing infrastructure to tell them the high beta stocks. They got their own filters. And so they're selling the hell out of these things, but at low volume. Very low volume today. Those volumes are like a quarter to a tenth. Very low volume, right? And so, okay, I get it. We're selling off the most risky things. I'm going to watch what happens. Now, if I go to my save screeners and I look at what's down, my guess is what's down. Yeah, look at that. A quantum company. Down 40%. They do security. They don't actually do quantum computing. They do quantum security. Think of like an ID Quantique. Think of quantum key distribution. This was always a very strong stock, and now it's down to $1.50. Selling them off. Remax real estate. All right. Yeah, that kind of says it all. The shorts are pounding all over. Arcit Quantum. So surprising. All right, I'm going to let you go. Thanks, folks. Net, here's what I told you. Just to summarize. Number one. The advantage to being in the stock market right now is slim to none. It's 4% expected return of the market. And the variance of the market is elevated. So your expected return is lower based on the variance. And in fact, your variance is elevated. If interest rates continue to rise, that edge gets smaller and smaller. This is just the expected market return for the whole market. No knowledge, no sophistication, right? We look at, again, just keep it at the summary level. Stop. Damn that. So from 2.2 to 2.9, if you invest in 1,654 stocks evenly, those are all stocks above $2 billion market cap. So there's no games in here. You're at a variance of 2.9. So you went from 2.3 to 2.9 times 10 to the negative 4. Takes you 41 stocks to get an edge. That edge is 5 times 10 to the negative 5th. That is an extremely small edge. It's a small edge, people. 41 stocks. This market is risk off. Now, we did a few things technically. If you're listening this long, you might as well get it all, right? Up until this week, we were including a couple of ETFs in there to get you a better answer. Copper, oil, the US dollar, different VIX, long and short plays, the S&P 500, the SPY, QQQ, IWM, and anything else we could think of. We put in different things. I was even going to put in a natural gas ETF, but I didn't. I got gold. All kinds of stuff, right? And the reason we did that is because now you can invest in stocks and other commodities like copper and gold, and maybe you could, work the diversification a little better. Now I've got stocks, I got metals, I've got commodities, I got long and short plays, I got VIX plays. See how it goes. And what I found was that it makes your answer better. By adding in ETFs, it makes the answer better, which is great, which makes sense. That's why you have these ETFs out there. So I stripped them all out because I just want to look at the stocks right now. You could do your own diversification. Go buy a house. Diversify, right? I was going to put some REITs in there too, REIT indexes, but it's fine. So if you look at just stocks, just common stocks, it's really hard to maintain a good edge. You kind of have to believe a few things. And unfortunately, with the S&P 500 at 4,058.64, and we look at the S&P 500 over 5 years, you can see that we're in a downturn. Which is interesting because this isn't the way I would. There it is. That's it's good enough. What's happened is the S&P 500 broke out of its bands, the Jeffrey band, I like to call that. And the first one said to the second one there, I hope you're having fun, band on the run. So you can see how it popped up, but it's nervous. Doesn't like being above trend. This should be at the close. I drew it wrong. You sons of bitches. There it is. It wants to come down. It wants to come down. It wants to get back into range, right? I don't see this as a breakout. I see this as a cop-out. So I don't know. I think the S&P 500 is still in a downward trajectory. And I think interest rates are in an upward trajectory. Let's see if I can find you some interest rates. Excuse me. Holy cow, Batman. Let's see if I can get you bond yields. $13-week. Here we go. Jeffrey, are there any surprises? We're going to go 5 years, okay? Yields went up to 2% in the 18s and 2019s. And then, they dropped. Do you know why they dropped? Because of COVID. The Federal Treasury decided to go from 1.5%, 13 weeks, to negative 0.3. It went to negative interest rates. And then they rode this zero interest rate protocol. And what a surprise. Look at how much it's gone up. So if I were to just look at it over a year, let's go 2 years. I like the interval of a week. I think it's fine. This is not the point that it's daily fluctuations. It's the trend. So I don't know about you, but this trend feels very clear to me. Extraordinarily clear. We're going to draw a regression line from here to here. And you can see that the regression, we are below regression. So the way that I would look at that, the way that I would understand that, the way that I would think about that is that interest rates are going up to maintain a revert to mean trend. You're going to see 5% in interest rates. 5%. I'm calling it 5% policy rate. 5%. I'm calling it right now. Jeffrey Cohen, U.S. Advanced Computing Infrastructures Incorporated, suggests that the 13-week Treasury bill will be yielding 5% by the end of 2023. It's not coming down, it's going up. That's not helpful for your stocks, people. Look at that. It's a beautiful chart. On this note, I'm going to say goodbye, guys. I'm going to cry in my cereal, my breakfast cereal. I'm going to shed a tear for those that have fallen, for those who have lost money, and for those who will continue to lose money. Because they're not holding 41 stocks evenly. They're not holding food companies, defense contractors, drug companies, very low risk tech companies, gaming companies, oil and gas investors. They're going for the gold. They're going for DraftKings. They're going for the crazy stuff. And you know what? Good luck. For those about to rock, we salute you. Have a great day. Good luck in the markets. Fight the Fed. Go ahead. Go ahead and fight the Fed for me. I'm not fighting the Fed. The only place I'm fighting the Fed right now is with Corbus. And do you know why? Because I think it is damn ridiculous that the market cap of Corbus is $13 million. And I am going to buy the hell out of this stock when my wash sale period ends. All right. You take care now. Bye-bye.